This is something which I'm very clear on. You have got to own physical gold, physical silver, and ensure that you hold it securely. Don't tell everybody, oh, I'm so clever, I bought some gold and silver and I store it at home. Otherwise, you find some nasty people might come around and try and take it off. Be sensible about it.
He discusses how the destruction of currencies can drive the whole economy into a depression. The Keynesian theory is that inflation occurs when the economy is growing, and deflation occurs when its contracting is debunked. Instead, Alasdair Macleod argues that every hyperinflation kills the economy.
How does that affect ordinary people, workers, savers, retirees, and what can they do about it?
It means that from a worker's point of view, lots of businesses will go out of business because they cannot afford to pay the interest that goes with a collapsing currency. It will drive the whole economy into a depression. For some reason, I don't know why it is, but the Keynesians seem to think that it's either or. Either the economy is growing, in which case you've got inflation, or it's contracting, in which case you've got deflation. That's complete rubbish. It doesn't work like that. You've only got to observe what happens in every inflation, every hyperinflation, and you can see that a hyperinflation actually kills the economy. And that's the situation which I think everybody faces. It's a combination. It's a combination of nastiness because on the one hand, you're losing your job. On the other hand, your savings are being completely trashed by rising interest rates. If you're looking at pensions and things like that, what's your pension going to buy? Nothing. If you're letting property, how do you keep pace with the falling purchasing power of your rent? You can't. It doesn't work like that. You fix rent, and that stays for some time. And even though your property maintenance costs are rising, you can't jack up the rent every 5 minutes in order to index it, if you like. That's not how it works at all. The property market doesn't work like that. So in all these areas, basically, you lose out completely. The destruction of the purchasing power of the currency is a real tragedy for the ordinary person.
Let's zoom in one more moment before we leave this tragedy, and that is, you mentioned the value, the purchasing power of your pension payouts, or in the U.S., we might say Social Security or pension. If you've got a defined benefit program that's promising to pay you X dollars of currency per month or whatever, that the value of that just keeps shrinking and shrinking until it becomes difficult, and it becomes painful, then it becomes an insult, then it becomes desperate after that. But wait, there's more. That it's not just the payout amounts becoming less, well, in the sense of their purchasing power, but isn't the solvency and the effectiveness of the ability of the issuing pension management or authority or whatever to even hold the ship together in jeopardy here if they can't make their coupon on what they need to be able to continue those payouts?
The impact of currency destruction on pension payouts. Alasdair Macleod explains how the value of pension payouts keeps shrinking due to the destruction of purchasing power, and how the solvency and effectiveness of the issuing authority are in jeopardy if they can't make their coupon payments. The pressure on the fund manager of a defined benefit pension fund is explained, and the way they try to square the circle by moving investments from bonds into equities is discussed.
There are cross currents in this. It depends how the pension fund is invested. If we're looking at a defined benefit pension fund, in other words, it's tied to the rate of inflation a sort of, say 2/3 of a final salary type scheme, that sort of thing, then a manager of that scheme has a real problem, certainly. On the one hand, he benefits from the higher nominal rates that investments in bonds will generate. But on the other hand, of course, the capital values of that fall. And what he will probably find is that the contributions coming in, which would normally keep the whole thing going, they start drying up as well. And he has a problem that way. As far as the sort of undefined benefit, as it were, if I can call it that type pension, then that pressure on the fund manager is less. But in all cases, the way in which pension fund managers have tried to square the circle is by moving investment from bonds into equities. And I think a conservatively managed pension fund would reckon that it has, say, 50% in bonds and 50% in equities. And if the equity side gets killed, the problem then is that you've got, and this is particularly the case with the defined benefit, there are companies that sponsor each scheme, or there may be a group of companies sponsoring each scheme. They're then asked to contribute to make up the actuarial losses. And are they in a position to do that? This idea of a pension gives you long-term security and all the rest of it, I'm afraid, gets blown out of the water by these developments. It does actually depend on stable purchasing power of a currency, which is what we appear to be losing.
There's been some talk about an additional risk ongoing now to the banking system of these interest rates by the Fed. And I think you touched on that a few moments ago when you talk about how it will affect small business owners and employees. If it impacts the business operation, in fact, some large percentage, and I think we talked about this last time, zombie companies where they're barely making their payments as it was, and now with rising interest rates aren't going to be able to make their payments on their debt or secure new debt. So the default against existing obligations by those formerly zombie companies as they finally fall over.
The impact of layoffs and loan risks on the banking system. He talks about the risks that come from falling prices and non-performing loans, which can be a problem for banks. Consumers who rely on their salaries and have no savings are in a vulnerable position. This part also mentions the increase in the set-aside for non-performing loans, which is likely to be a problem in the future.
Will how that impact the banking system in addition to the layoffs of all their employees?
Yeah, it absolutely. We're now talking about loan risk. We've been talking about, if you like, the risk that comes from falling prices of investing in term duration bonds. Now we're talking about non-performing loans. Obviously, initially, in the early stages of an increase in interest rates, banks managed to expand their margins. And we saw that in 2022, bank profits rose very significantly, and the share prices along with it. Nobody really paid very much attention to the increase in the set-aside for non-performing loans, which has happened. But that is definitely going to be a problem. And there is another problem. I think I'm right in saying that in both the UK and in America, something like 70% of salaried staff, or is it 80% of salaried staff, basically spend their entire salary and they are relying on the money coming on payday because their capacity to spend, feed the family, whatever, to pay the bills at the end of the month is zero. Literally, they rely on that money coming in. So when they lose their jobs, they've got nothing, absolutely nothing. The only thing they can get is help from the state, welfare benefits if they qualify, and that doesn't really pay very much. It's certainly a lot less than, or it should do, a lot less than what you might earn. So it's not just the corporate side which is going to be bad. The bad debts that coming out of consumer lending, I think, is likely to increase very substantially as well.
Yet one more wave crashing against the failing dam of the banking system then as well. People who have deposits in the bank or people who are wanting to protect themselves from destruction of the currency as you've described, or fragility and systemic risk in the banking system, what options are available for ordinary people to consider to reduce their risk and to shore up their resiliency in the face of those risks?
We've fortunately seen the situation whereby the idea of a bail-in is now gone. The Fed and the Treasury understand that they must ensure that pretty much every bank has got to be rescued one way or the other, and depositors protected. So if you're prepared to put your faith in the government or the FDIC, if you're less than $250,000 anyway, then you perhaps don't need to worry too much. There may be the inconvenience, if you like, if a bank gets into difficulty and you can't take your money out until it's sorted. But this tends to be a weekend problem. I think this is why these appear to happen at weekends. Other than that, it does make sense, I think, to move your money into a large. If you can have a retail account in a large bank, then keep some liquidity there. But that's only within the fiat currency paradigm, because the situation is so serious and it is so global, and this is just the first, as I said, act one of the tragedy, then I would say that you've really got to get out of the fiat currency system to the degree that you think is wise for your own personal circumstances. And the only way you can get out of the fiat currency system is twofold. Firstly, you buy something real, tangible, whatever, or alternatively, if there's nothing there that floats your boat, then you go for the only form of circulating media which is truly money and is hoarded against this eventuality, and that is gold and silver, either in coin form or bullion form. And I would say that owning shares in an ETF or something is not good enough. It is not, because you only have a claim on gold or silver with the respective ETFs. You don't actually have gold or silver. You're in the same position as someone in the futures market trading the GC, the gold future. You might have a claim on it, which you can, in theory, exercise at the end of the future's life, but you don't have it. You don't own it. You've got counterparty risk instead. And so this is something which I'm very clear on. You have got to own physical gold, physical silver, and ensure that you hold it securely. Don't tell everybody, oh, I'm so clever, I've bought some gold and silver and I store it at home. Otherwise, you find some nasty people might come around and try and take it off you. Be sensible about it. This is something you're protecting yourself and your family. And also your close friends, because they won't have protected themselves.